I will share my investment strategy, more recovered than new cases. Such a low level in the last decade was... How you doing, guys? It's Damien here. I'm sure you've heard about what happened in the last week. Everyone seems to be frightened by the spread of the virus. And the fear of the coronavirus came to the stock market as well. The Dow Jones Industrial Average and S&P 500 each dropped 12% and 11% for the week, respectively, making their worst weekly performance since the financial crisis. The CNN Fear and Greed Index, which spans from 0 to 100, dropped to extreme fear levels. Taking into account the current situation on the market and the fear spreading all around the world, I decided to sell all of my stocks. No, I'm just joking. Why would I do it? I am a long-term investor and there is no real alternative for investment now. In fact, I went on shopping. I sold some shares, but overall I have been a net buyer of stocks this February. In this video, I will tell you what transactions I made in February, as well as I will share my investment strategy. My investing strategy is not to try timing the market. I know people who have been afraid of investing since 2009 and they have waited on cash in their bank. Well, they missed on several 100% of potential gains. They could easily have a few times more money now. So what I do with my new saved money? I buy more shares of companies with the most growth potential. At the same time, I sell positions I no longer think are the right choice for the future. So when the prices of some companies went down 15% or 20% in comparison with the price just 2 weeks ago, should you sell or should you buy? Do you prefer to buy a nice pair of jeans when it is for full price or when the same pair of jeans just went on sale? Let's ask Warren Buffett, who is considered to be one of the most successful investors in history, what he thinks about it. In a recent interview with CNBC, 89-year-old Berkshire Hathaway CEO Buffett said he had been a net buyer of stocks every year since he was 11, a period which has seen 14 US presidents. Should we be afraid? Is it the right time to buy good businesses on the cheap? Of course, I would be glad if I sold before this panic selling happened in the stock markets. But in this year alone, 2020, I am still up 6.5% on my Polish investments versus index WIG went down 14.8%. Here are the charts of my most significant positions from the Polish stock market. Alphabet, Facebook and Apple stocks were on the current levels just 2 months ago. What is positive news is that every day there is more recovered than new cases. The mortality is high only among older people. Also, Fear and Greed Index on such a low level is a contrarian indicator. When it is at extreme fear levels, it tends to hint about the right moment to buy stocks, not to sell them. Let's look at what alternatives do we have and what history is telling us. The US government bonds are at the all-time lows. Such a low level in the last decade was a good signal to buy companies from the Polish stock market. Based on these two cases from 2012 and 2016, we can expect around 40% growth of the overall Polish stock market during 1.5 years. Of course, that is not a prediction, but the migration of capital theory seems to fit this picture. Such a low yield from bonds should not encourage us to choose this asset class. Maybe properties then. As you can see, the property market in Swindon, where I live, is in decline. I expected that because of Honda company leaving Swindon, as well as less demand for properties because of Brexit. Also, I showed in this video that in terms of rental properties, the potential yield is much less than what I can get from investing in the stock market. Smash that like button for the YouTube algorithm. It will help reach more people and will encourage me to give you more useful content. The first thing to know is that you should not fall in love with your stocks. You should think about their underlying businesses, not just looking at the stock charts. You will be able to evaluate the companies better and discover their value. Such thinking can help you navigate such situations as the outbreak of the coronavirus and make the right decisions about its effect on your companies. I do not try to predict short-term changes in stock prices. Let's think about my biggest positions: Alphabet and Facebook. Yes, the slowdown in the economy can make companies spend less on advertising. But have in mind that with the effectiveness of Facebook advertising, companies will rather cut on the costs of print or TV advertising. Facebook shows quite relevant ads because it knows a lot about the person using the platform. So that is why it is much better than TV or print advertising. You see only ads which are related to what you can be interested in buying. For print advertising or TV, it is not possible to target an advertisement into a specific person. Also, Facebook and Alphabet may benefit from people spending more time on the internet while they stay home, avoiding potential infections. If people stay indoors, they use Facebook or they watch YouTube. It means that such internet companies should do relatively well. Apple can be more affected by the coronavirus. It is both because of its supply chain in China and because of fewer devices being sold in China. I will make a more detailed analysis of Apple company in the next video, so subscribe if you do not want to miss it. Apple is almost 30% of Warren Buffett's stock portfolio. I feel very comfortable with having 10% of my wealth invested in this great company. Then let's look at my Polish companies. The biggest positions are stocks of 4 gaming developers. I also do not see too much of danger here. People spend time indoors. They spend more time playing games. And then my Chinese exposure. You can look at the charts for both companies. Even though the share prices of many Chinese companies went down significantly, my shares of Alibaba and Tencent are doing well. Their products are very deep into the lives of Chinese people. These 9 companies consist almost 87.6% of my stock market portfolio. The S&P 500 index went down 8.56% this year. My stock portfolio is still up by 0.69% this year. The proper selection of businesses can give you an advantage. So what I did in recent days with my investments. First, I sold some shares of CD Projekt and Playway gaming companies. It looks now like the right timing, but the truth is that I'm moving my money slowly from my Polish brokerage account to my ISA account. Investments within this account allow me to not pay any taxes from the income or capital gains from investments in an ISA. Then I bought more Facebook and Lyft shares. Finally, I increased my stake in Tencent on Monday. I waited for the drop in stock price and then I doubled my shares count. My current stake is already up 1.1%. I sold my small exposure to Vedanta and I bought more shares of Playway and 10 Square Games. As you can see, I increased exposure to my winners. There are some companies which I have on my radar. Let's look at the tourism sector. Ryanair, Delta Airlines and Carnival could grow nice when the whole virus spread stops. Also, Disney can experience some nice rally as one of the most negatively affected companies from the virus outbreak. For tourism stocks, the lower revenue is a bigger problem. You will not take 2 holidays instead of 1. Of course, it would be useful to be able to predict when the stock market tops and bottoms are. But it is not possible. The only thing you can do is to invest in great companies which over time will do well. And if the correction occurs, just buy more shares of the great businesses. But remember not to listen to bloggers and vloggers. Always do your research and have conviction why you buy shares of the specific company. Let me know what are you planning to do. Do you have any money allocated in the shares of these companies? Did you sell your stocks because of the fear for the spread of the virus? If you enjoyed this video, make sure to subscribe to receive a notification about a new video being published, or feel free to add me on Instagram, Stocks and Freedom. Thank you so much for watching, and until next time, happy investing!